Value investors face a lot of ridicule. In fact, the market isn't even designed for value investors. In the following video, Chinese super investor Li Lu is sharing his views on value investing. He also explains why the market is not designed for value investors and how we can take advantage of this fact. Long story short, here's the lecture with Li Lu.
Now, you are really not the majority. You are actually a very, very minority. And the stock market is really not created for you. It's created for the 95% of all the other people. And that's really where your opportunity is. And that's where your challenge is. So to understand that before you go into management business is really extraordinarily important. And that's really that's what I first learned when I came here and listened to Buffett. That's one thing that sticks in my mind. And that really sort of helped me to position where I am, because I really know by then what kind of a person I am. I think most of your challenge, especially those of you who really want to end up in the management business, and I'm actually tonight primarily addressed to that group of people. Sorry for those people that are not. Your biggest challenge is really to understand whether you're that 5% of the people or you're the 95% of the majority. And you might think that because of the training, because you do this, you're sort of intellectually or theoretically biased towards that small minority group of people. You'll be amazed, how much you would change. My career is sort of take a little twist as well. I always kind of run my own fund. Part of the time when Bruce sort of mentioned was Julian, was really sort of when he invited me to really share office with him, because he sort of invited a whole bunch of fund managers that he invested in, and also share ideas. And that's when I sort of get a much better understanding of how the 95% of other people really operated. And it is tempting, because why 95% of the people don't do what you guys are here try to do, despite the spectacular success of Warren Buffett and Charlie Munger. Why is that? Anybody have a reason? Why is that? Why there's only, yes?
Because emotionally it's very difficult.
Yeah, emotionally it's very difficult. But if you think that, it's very convincing that value investors over a long period of time really have much, much better kind of returns. You think that's where the money is, even if it's emotionally difficult, you think they wouldn't change it? Any other reason?
Well, people are measured by short-term returns.
Right.
Actually, to that point.
Right. We actually are very close to the point. I think that the real answer is that's really where the money is. Why that's where the money is? Because the market is really created for those kind of people who are really thinking of trading in and out all the time, and therefore that they will pay attention to the short term. And therefore that if you put up with that requirement, that's really where the asset is going to find you. And so as a result, that statistic, despite the huge discrepancy of a performance of that 5% have a spectacular return consistently over a long period of time, 95% of the money or something close to that probably would always reside to somewhere else. And if that's where the money is, most of the people would naturally end up there. So my first kind of a point I want to leave with you is really to understand who you are, because you will be tested through all this period of time through your future career development, that you're going to really have to really face to ask yourself whether you're a value investor or you're not a value investor. Now, if for whatever reason that your personality is built to be a value investor, that probably means that you're somehow, genetically mutated throughout the process of evolution, that you're very comfortable being in a minority, which is not really very natural to human beings. Throughout our human evolution process, that most of us survive because we stick with the group in face of large mammals. That's the only way we can survive. And so it is really over you know, tens of thousands of years of evolution. It really is, you know, deeply ingrained into your genes. But occasionally you will find a small percentage of people really survive despite the fact that they really have a different kind of a gene. It's almost through a mutation process that group of people survived. So that's the first thing. You have to really be very, very comfortable, you know, being very much by yourself. And therefore you would naturally adopt the attitude you're right, not because other people agree with you, but because your reason, your evidence are right. It is common sense. But of course, as people said, common sense is the least a common commodity. Most people don't think that way. And secondly, that you would probably spend most of your time truly being an academic researcher instead of so-called a professional investor. Most of the time you're going to spend as a professional investor, as a value investor, not a professional investor, is really to be an academic, to be a researcher, to be a journalist, actually, to basically have insatiable curiosity, to really and try to figure out how just about everything works. Because investing really, the more you know, the better off you are as an investor.